Mrs. Sharma, and I'm here to take the class on joint venture account, that is chapter number 6 of your textbooks. Joint venture account. Before getting into the details of the chapter joint venture account, I would like to highlight on certain areas which you should know. First is sole proprietorship, you can say, or sole proprietor. What is sole proprietor? See, for you have come across certain terms, sole proprietor, then you also know partnership firms, right? These are the two things which is already very clear in your mind after doing many chapters or studying many textbooks, studying the areas, the theoretical portions. So I would just like to highlight, sole proprietorship means when a person is managing the business alone, right? He is the only person, the sole owner or the wholesale owner, who has put his money, his capital into the business, and he is running the business, right? So he is the sole proprietor, and he is working, or he is running a sole proprietorship firm, right? He has put his money, whatever will be the profits or the losses will be borne by the sole proprietor, right? So this is known as sole proprietorship. Now, why you need a partnership firm also? Why not only a single person manage the company or a firm or a shop or a business? See, because there are certain limitations of the above. Because there are certain limitations of sole proprietorship which has led to the emergence of partnership firms. Now, what are the limitations of sole proprietorship? When you want to extend your business, when you want to elaborate your business, you want a lump sum capital, right? It gets very difficult on the part of one person to put in a lot of money, because see, when there were 2 to 3 persons, you have a very strong goodwill, right, in the market. If one partner is not in a position, then other partner may take the charge and can arrange the money. But in the case of sole proprietorship, a lot of money or a lump sum amount of money may not be granted by the bank people, may not be granted by the credit associations or the people or the general lenders, you can say. So problem of money or funds could be one of the limitation of sole proprietorship. Now there is so much business, or there are so wide varied aspects of business today that it's very difficult for one person to sit at one place and manage the business, right? You have to be in constant touch with the people who are providing you finance. You have to be in constant touch with the people who are who will help you to market your products. So you have to run from pillars to poles, that is, you have to run from from the financer to the distributor to the wholesaler. So you have to cover, and to the government also. Government is also one of the authority which will be in your link, right? So you are answerable to them also. So there are many people whom you have to be answerable or accountable, or who are accountable or answerable to you. So you will not be able to manage, or you might not be able to manage. So that could be one of the limitations of sole proprietorship, that due to the varied task involved in the business, there has to be a partnership, or a partnership firm has to emerge. That means there could be 4 to 5 people, 10 people who are managing a certain firm, and see, one person is activated, one person is sitting at the office and taking the charge of the office activities. The other person may work in the business area, that is maybe you can say it could be a factory running, so he can undertake the charge of production manufacturing. He can take the charge of the workers employed under him. One person is very good at distribution and marketing, so that person may go and talk to the people who has that partner has a very good rapport with the distributors of that might help with the company. There may be many partners, or there may be a partner in the firm who has a very good control or hold or contacts with the government. So certain areas, or also there are certain processes which may be cut short because you have contact, or maybe you can get your work done faster. So that is another limitation of sole proprietorship, that one person may not be able to concentrate wholeheartedly, or may be able to concentrate the way he should in managing his business. So that has led to the emergence of partnership firms. Right? So this was sole proprietorship, when a sole person or a single person is managing a firm. So, and the other is partnership firm. There may be more than two members who have undertaken to start up with the firm, who are partners. Partners also, you have different types. Partners, you have the active partner and the dormant partner. Under partnership also you have active partners, you can say, and the others are dormant partners, or you can say they are sleeping partners. Right? What are active partners? Active partners are those which have contributed their money into the business, right? They have put their money into the business, and they have whatever profits are earned, they will get the profits. Whatever are the losses, they will be ready to bear the losses. They have the voting rights also. That means they have the active participation in running the business. What are dormant partners or sleeping partners? Dormant or sleeping partners are those partners which are just in a position, that is, they have just put their money into the business and they have no voting rights. They don't share any kind of losses. Yes, if there are profits, definitely they have a share in the profits, but they are not accountable for any losses. So these are the dormant or the sleeping partners. So this is partnership firm, this is sole proprietorship. Now what does joint venture means? What is joint venture? Like you have, joint venture is basically, partnership means when few people come together to work, that we will decide that they will work together, right? So that is partnership. I join hands with 3 of my friends and I say, together we have put money into the business, now we will work in partnership, right? So that is partnership. What is joint venture is? Joint venture is basically again the same thing, that is, few people are coming together and they are working for a certain motive, right? And when that motive or that purpose is over or completed, their joint venture or their partnership breaks mutually. It's not by fights, but mutually it will break. So joint venture means joint venture comes from the word venture. Venture means you have a special undertaking, right? You have a special undertaking that is known as a joint venture, right? Means you have undertaken, or few of the people have come together for a special undertaking. You are together because for a special purpose, right? Suppose you say, example here would be, suppose construction of a road or a bridge or a dam, etc. Right? So suppose I am constructing a road. I have been given a contract of constructing a road from one place to the other. Maybe it could be few kilometers. I have been given the contract, right? So what happens, that I have a particular time period when I have to construct that road. So there will be few people like I, Mr. A, Mr. B, Mr. C, Mrs. A, Mrs. B, Mrs. C. 3-4 people come together and they are constructing the road. They have got the contract, or they have undertaken a responsibility of constructing a road. That could be, maybe they say you have to construct this road within a period of 14 months. Right? According to the distance and other lacunas and other facilities, maybe they have given a time period of 14 months to construct a particular or perform a particular task. So construction of a road, 14 months that is a venture, means a special undertaking. That is a venture means in that particular period you have to complete a particular task, right? Joint venture means few people are coming together and they are undertaking a particular task. That is known as a joint venture, right? So venture meaning I've understood. Joint is when few people are coming together and they are undertaking a special responsibility. So we were discussing about the joint venture. So venture I told you. Now joint is few people coming together. Now you see how it is different from a partnership. Partnership is an entity that is existing and existing and existing, you know, infinite life. But a joint venture is an entity or is for a particular time period. Like when the construction of the road is over, that is 14 months pass by, the road is constructed, automatically the people who were there for a particular task are separated and they are on their own ways, right? So that is, you know, called as a joint venture. Suppose you have different people under this, right? You have Mr. A, Mr. B, Mr. C working under joint venture together, right? So what are they known as? They are known as co-venturers, right? These are the people who have undertaken joint venture and they are known as co-venturers. So this is joint venture. And you know what? Joint venture, when you do, you are expected to make some journal entries, that is pass some journal entries. Then according to those journal entries you will be preparing accounts. See, once you make journal entries it is very easy to prepare the accounts. Then after prepare, that is the end, journal entries and accounts. Which all accounts are prepared under joint venture? You will have joint venture account, right? Then you will be preparing joint venture or joint bank account, and you might also be asked to prepare the co-venturers account, right? So you will be having different types of accounts that could be prepared. I would like to tell you that what might be the differences between joint venture and partnership, because there are many times when students who are studying joint venture account or studying partnership tend to get confused between the two terms, that is joint venture and partnership. Let me get clear on certain grounds what are the differences of joint venture account and partnership account. Let's deal with the differences, then we will do the journal entries, and finally I will let you know how to prepare the account. So in this class we will have the passing of the journal entries, the general journal entries that you pass that are most often asked in the question, and then preparation of the account. So this class would be dealing with that. So next topic that I would undertake would be difference between joint venture and partnership accounts. Right? Partnership and joint venture. What could be the difference? First head could be meaning. Right? What is the meaning of partnership and what is the meaning of joint venture? Joint venture meaning and meaning of partnership. See, joint venture is a very temporary association. As I told you, very temporary association, or you can say for a particular task, few people, two or more people, that is, two or more people or few people, people come together to undertake a particular task. Right? So it is in a very temporary nature kind of a undertaking. Next you have partnership. Partnership is a long-term association, right? You have more than two persons. It is a long-term, and joint venture is a temporary one, right? So joint venture is a short-term, you can say, or a temporary. It lacks fixed nature aspect. Right? Next difference set of difference or basis of difference could be the objective. Right? What is the objective of partnership and what is the objective of joint venture? See, joint venture objective could be to complete or undertake a particular venture. Venture is a task or an activity that is given to you, right, on a temporary basis. So joint venture, the objective of joint venture is to complete a particular task or undertake a particular venture, or it is joint venture is formed to undertake a particular venture or a particular task. What is the objective of partnership? It is formed for a long-term business element, right? Objective is you have started a partnership so that you can work together. That is the objective of partnership. More people will come, they will join, some will leave, some will join, put in money, carry forward the business for years and years. But objective of joint venture is like it is formed for a particular venture or for a particular purpose only, right? Next point of difference could be the name. Name means no separate name is given to the joint venture. See, partnership has a particular name. You know, it has, like, you have sole proprietorship, you have partnership Mr. ABC company, or partnership XYZ are partners. So a separate name is given to a partnership concern. But joint venture has no separate name. Actually, there are few parts. Actually, it is a part of partnership only. Partnership means few people are coming together. In partnership also they come together, right? Now, this is for a long, when few partners come together, but they are coming for a short period for a particular purpose, that is joint venture, right? So it is a kind of a partnership. So no different name is assigned to the joint venture. It is the same thing that is running. So no difference can be made here exactly regarding the name thing. Next point of difference is statutory requirements. Next difference is statutory requirements. What are the statutory? Basically, you know what? You have certain statutory requirements. You have Partnership Act 1932. Right? So according to that particular act, your accounts are prepared. All the activities are governed by the Partnership Act. How many partners could be taken for a particular firm, and suppose you have running a special kind of a partnership, you have some special kind of a partners, how many active partners, what is the kind of procedure of voting, how much capital could be raised from the public, how much capital could be contributed. So this is all mentioned. These are all the statutory requirements. Actually, statutory requirement means whenever the act is like what act governs, like act governs or law governs a particular state of mind, you have to walk on the left side of the road. So that is your act is your law. Basically, law or act or whatever you say here, law is governing you, right? So those are known as the statutory requirements or legal requirements. Partnership Act 1932 states certain things. So you have to work. You have to provide interest on capital. If it is silent, you don't have to provide. Interest on drawings is provided. What? Right? So this is all under statutory requirements. So under partnership, statutory requirements are means partnership is governed by certain statutory requirements, but joint venture is not governed by any kind of a law, or no act or no special act or no law is applicable on the joint ventures, right? Next point of difference is you have maintaining books of accounts. Maintaining books of accounts. See, you have certain books of accounts that need to be prepared under a partnership firm. You need to have partners capital accounts. You need to have partners separate accounts. You have there are certain books which are needed to be prepared. There should be a proper balance sheet of the partnership. Let me check what are they doing. So the government has provided an order for the people under partnership firm to maintain a certain kind of accounts. But joint venture, there you know what, there are certain set of books which are to be maintained, which are not to be maintained, but that is not mandatory in nature, means that is not compulsory. It is according to their will and wish that they may or they may not prepare proper books or maintain proper books of accounts. It is as per their convenience, that if they are working together, that you will study in another topic, that how they maintain the book of accounts. But maintaining the book of accounts is not mandatory on the part of joint venture, but in the partnership, the people undertaking the partnership firm are made to maintain the books of accounts, right? Next is liability. Next head that you will study is liability. See, co-ventures liability is limited to a particular venture only, right? But is liability means, suppose I, Mr. ABC, right? If you say Mr. ABC are working together under a joint venture, so and they are constructing a road which will be completed in 14 months. So their liability is restricted to that particular venture only, or to that particular period only, till when they are working together, right? So liability, they are liable only for the period they are together. Together means for a particular venture, whatever time it might be. So joint venture is, their liability is restricted to the period they are under or working of the venture. So that is liability of a joint venture or co-joint venturers. But when you talk about partnership, your partnership means that is a firm which will go on and on and on. That will never, means it is an ongoing, that partnership is an ongoing process, right? That is an entity that is an artificial entity, as you have studied in the definition, that has no end to it. That means that is a constant procedure of people coming in and going out, and partners may come and go, but partnership continues. That is an always existing firm type. So the liability of the partners is always unlimited, right? Because that's the partnership. The partners are working for not only a particular purpose, but they are working together till the time they are able or in a position to carry on their business. So their liability is unlimited. Last is dissolution. Last is dissolution. Dissolution means, see, dissolution is joint venture comes to an end on completion of a particular venture, right? When venture is complete, 14 months are complete for the construction of a road, automatically the joint venture dissolution means it comes to an end, or it terminates, or it ceases, or it stops, right? So that is the case of joint venture. But partnership is not dissolved until and unless the partner demands dissolution, or they have been legally bound to dissolution, that is dissolution of a firm is being legally bound. So dissolution means, under joint venture, dissolution means that whenever the venture is completed, automatically the firm or the joint venture, the dissolution takes place. But what about the partnership? Dissolution takes place on two grounds. Firstly, when the partners mutually decide that they are not in a position to carry the partnership any further, so dissolution will take place. Second thing, when the government has asked them for certain reasons, maybe certain legal reasons, the government has asked them, or the law has asked them to dissolve the firm. So legal dissolving of the firm will lead to dissolution, and sometimes the partners' demand for dissolution may lead to dissolution of the firm. So dissolving of the firm are of two types under partnership, but under joint venture it could be one only, that is whenever they are, whatever work they have undertaken or particular venture they have undertaken, that comes to an end, or that comes to an end or completed or terminated. So this is the difference between partnership and joint venture. Talk about the meaning, objectives, name, statutory requirements, then maintaining books of accounts, liability, and your dissolution, right? Next, what we will study under joint venture account would be the journal entries, that how you pass the journal entries. You have two ways of passing the journal entries under the joint venture account. I will just discuss that. You have no separate books are maintained and separate books are maintained, right? So two ways, no separate books are maintained and separate books are maintained. These are the two ways how your joint venture account operates, right? So we'll switch on to the next topic of maintaining of books under the joint venture system. So next topic under joint venture account is how the books are maintained, right? So you have when separate set of books is maintained. We will first deal with when separate set of books is maintained. Right? When separate set of books is maintained, and second is when separate set of books is not maintained, right? So when separate set of books is maintained, we will see how you do. First point under this would be, or first entry or first condition would be initial contribution in the joint bank account. See, when two people come together, undertake the joint venture, they open a joint bank account, right? So initial contribution means who is making initial contribution? The co-venturers, right? So you have joint bank account, two co-venturers. So first is initial contribution in the joint bank account. You have initial contribution in joint bank account. Initial contribution in the joint bank account means they have opened a joint bank account and they are putting in money into the account to start off with the business. So what will be the entry? Journal entries we are passing. Joint bank account debit to who is putting money? Co-venturers account. Okay? Here you will put the narration being money, initial money contributed. So this is joint bank account when initial contribution is made in the joint bank account. This is one important entry. This is debited because money is coming in, and who is contributing the money? The joint venture. So their account is credited, right? Next is goods purchased in cash. There are certain few entries that I have discussed. Goods purchased in cash. You have goods purchased in cash, right? Goods purchased in cash. What journal entry you will put? Goods purchased in cash. What is coming in? Goods is coming in. What is going down? Cash is going down. So definitely, see, here you will not write goods, but where the goods are coming, they are coming to the joint venture account. So we will mention joint venture account everywhere, right? So you will not write goods account separately, you will write it under joint venture account. Joint venture account is debited, right? Then what is going out? Money is going out. From where? From bank. So to joint bank account, that is credited. Write the narration, close the entry, right? When separate set of books is maintained, I explained you the two entries of initial contribution and the goods purchased in cash. See, another thing is goods purchased on credit also. So it is goods purchased on credit, right? Goods purchased on credit. Generally what entry we do? Goods to sundry creditors. So we are not writing goods directly. What we are writing? Joint venture account instead, right? So you write joint venture account debit to what? To sundry creditors. Sundry creditors account credit. Write the narration, close the entry, right? Next, that entry might be asked, or something that is general in nature, is you have goods supplied by co-venturers out of his own stock. There is no sundry creditor from outside. The co-venturer is supplying his own stocks, right? So goods supplied by co-venturer, goods supplied by co-venturer out of his own stock, right? What entry this could be? This is, again, goods are coming in, so joint venture account debit. Joint venture account debit. Goods are coming in, you're not writing it directly, you're using the joint venture account through joint venture account, right? Next is, if it is cash, you write bank. If it is credit, on credit, you write sundry creditors, or whatever, whoever the name they have given as the creditors. But if it is out of, by the co-venturer, you write to co-venturers account, write the narration, close the entry. Okay, so that the difference comes here, right? Next entry that could be possible is amount paid to the sundry creditors. Amount paid. This entry we are completing. Amount paid to sundry creditors, right? Who is getting money? Sundry creditors. Their account was credited. Now we want to finish their account, pay off and send them bye-bye. So their account would be debited, right? Anything that is credited, to nullify the effect or to cancel the effect, or you have to stop the something. So whatever is credited, you debit it, so it will be equalized. There will be no effect. So sundry creditors will be sundry creditors account will be debited, because you are paying them off. From what you are paying? You are paying from the joint bank account, right? So what is going out? Cash is going out. Through what? Through joint bank account, that is credited. Pass the narration and close the accounts. So this is goods purchased on credit, co-venturers, money paid or amount paid to the sundry creditors. This is again few set of entries that we have done. Let's switch on to the other entries. Next entry that would be is again expenses paid out of the joint bank account. See, we are just doing the probable entries that could be asked. So it is expenses paid out of joint bank account. Expenses paid out of joint bank account, right? Expenses paid out of joint bank account means your what is debited? Your joint venture account. See, goods purchased, joint venture debited. Expenses, again expenses is what? A debit item. So what will be debited? Not expenses, but what? Joint venture account. You will pay it through joint venture account debited, right? So the joint venture account is debited. What is credited? Out of what you are paying? Joint bank account. Money is going out, so that will be credited to joint bank account, right? So that will be credited. Write the narration and close the entry. Next that you will deal is expenses paid out of joint by the co-venturer out of his own cash. So expenses are paid by whom? Co-venturer, right? Out of his own cash. So instead of joint bank account, what you will mention? You will mention co-venturer's account. So again expenses are paid. So joint venture account debited to co-venturer's account, right? Co-venturer's account is credited because money is going out of his account, right? Next probable entry that would be like goods sold on cash, right? We did goods sold on cash, then we did goods sold on credit, we had goods purchased, we did. This is goods sold, right? So money is coming in. Goods sold on cash. What is coming in? Cash is coming in. What is cash is coming in means what you will debit? Not cash. We generally write what? Joint bank account, right? Joint bank account is debited, right? What is going out? Goods are going out. But do we write goods? No. What we write? We write joint venture. To joint venture account, right? This entry is complete. So you had expenses paid out of, expenses paid by the co-venturer, goods sold on cash. Another entry that could be is goods sold on credit. Goods sold on credit. What is goods sold on credit? What is going out? Goods. So joint venture account is credited at any cost, right? Credit means whose name should come here? What name should come here? Debtors account, right? Goods sold on credit, debtors account. So instead of joint bank account, what you will mention here? What will be sundry debtors account would be debited, and what would be credited? Joint ventures account would be credited. This is again one of the few entries that you have, goods sold on cash and goods sold on credit, right? Next we will deal in the other entries that could be asked in the exams or that are a part of your joint venture chapter. Next set of entries that are a part that could be asked would be like you have, it is bad debts written, or you can have amount collected from sundry debtors. See, you just sold goods on credit, now you will collect the amount from sundry debtors. So amount collected from sundry debtors. Amount collected from sundry debtors means what is coming in? Cash is coming in. So cash is debited. Instead of cash we write joint bank account, right? Joint bank account is debited, right? Who is paying? Sundry debtors are paying. So let us credit their accounts. They have paid. Sundry debtors account is credited. Write the narration, close the entry, right? What is next? Bad debts written off. Bad debts written off. Bad debts written off means you have certain things, there was certain amount that was not receivable from the debtors, so it is written off, means you will never get that amount, right? So sundry debtors is an item of asset. When it is decreasing, that is, it is an asset means debiting. When it is decreasing, see, when debtors you are getting more, so you will debit it more. But when it is coming down, means that money you will not receive, means debtors are coming down, so you will credit it. What will be debited? Joint venture account. So entry would be joint venture account is debited to sundry debtors. Why sundry debtors? Because you have not received a certain amount from the sundry debtors, so you are crediting their amount. So that particular amount is being credited. So joint venture account to sundry debtors. This is amount collected. This is bad debts that are written off. Next would be shares or debentures received as a contract price of sales. Right? Sometimes what you get, you don't get cash from your debtors. They say we will give you certain amount of shares or a particular amount of debentures. So that would be shares and debentures. Shares or debentures received as a contract price. received as a contract price, right? Received as a contract price, or you can say amount of sales. So what that entry could be, if you are receiving money, it is joint bank to sundry debtors. If not, then no joint account will come. What will come? Entry would be shares or debentures account debited, right, to joint venture account. No other account you will mention. It will be joint venture account, because joint venture account is receiving the shares and debentures. So shares and debentures to joint venture account. So this is shares and debentures received as a contract price or a act of or amount of sales, right? There are a few more entries to be discussed. Next is shares and debentures are disposed in the market. See, why we receive shares and debentures? We receive shares and debentures because we were not paid the money by the debtors. They gave us shares and debentures. So now whatever shares and debentures we have sold them in the market. So what we are getting? We are getting cash. So we will write cash? No. What we write instead? We write joint bank account debit. Right? What is credited? Shares and debentures. Shares and debentures are going out or finishing it off. So to shares or debentures account credited. Write the narration, close the accounts. Right? Next, what is probable is salary or commission on sale given to the co-venturers. See, you have salary or commission given to co-venturers for the sale they are making. See, for the sale they are making, and this is given basically to the sleeping partners, right? So they are given on particular sale basis, they are paid the amount. So what will be the entry? They are getting salary or commission. What is salary or commission? That is a debit item. It is like an expense. So you will debit it. But what we will debit it through? Joint venture account. So joint venture account is debited. What is credited? Who is getting? Co-venturers. To co-venturers account. Right? So joint venture. Through joint venture you are paying salary and commission, that is a debit item, so you are debiting it, and to whom it is being given? To co-venturers. So write the narration, close the entry. Next is your profit on the joint venture transferred to co-venturer. Now sleeping partners will get salary or commission, but the active partners will get profit. So profit of joint venture is transferred to whose account? Co-venturer's account. So what entry you pass in that case? In that case you pass the entry of co-venturer's account. Who is getting money? Co-venturer. So you debit his account. Co-venturer's account is debited. What account is credited? Profit. Profit is through what you will pay profit? Again to joint venture account. Right? Write the narration, close the entry. So this is shares disposed, salary commission given, it is only given to the sleeping partners, profit that is given to the active partners. Right? We will do the next two entries. Next entry, the last entry that is being given to us. Second last entry is that could be asked in the questions is amount paid by one co-venturer to another for mutual settlement. Amount paid by one co-venturer to the another for mutual settlement. See, if I am not able to pay, if I am not able to put the money into the business, you put, then I will give you later on. It could be for mutual settlement. So what entry? This is co-venturer's account debit to co-venturer's account. Now who is what? So amount that the co-venturer which is being debited is certainly the receiver. Right? So his account is being debited. This co-venture whose account is credited is the giver. So his account is credited. So co-venture's account debit to co-venturer, the giver. This is amount paid by one co-venturer to another for mutual settlement. Next is if co-venturer paid amount due from him to joint bank account. Sometimes the co-venturers also take money from the business, so any amount that is due by the co-venturers or from the co-venturer, he will pay to the joint bank account, because you cannot use the money of the business. If you are using the money of the business, certainly you have to repay. So this will be joint bank account. Why? The money is coming in joint bank account because the co-venturer is paying the money. So joint bank account debited to co-venturers. Why? Because he is the creditor, his account is being credited because money is going out of his account. So joint bank account debited to co-venturers account. These were certain entries under the head when separate set of books are maintained, right? We will also deal with when separate set of books are not maintained. They are all the more same. There could be some difference. We will deal with the differences. These are the two probable entries, what I have told you, 10 to 17, 12 to 15 entries, which are used in the questions that we will be solving in the next class. We will begin with the first numerical of joint venture account, question number 1. And you have to prepare joint venture account, co-ventures account, debtors account and bank account. Let's prepare the joint account first. In the books of Prakash and Kiran. So you will write joint venture account in the books of Prakash and Kiran, right? Then you will have particulars, right? And you will have the amount as I've already written. So this is a rough amount column, fair amount column. Similarly, rough amount column, fair amount column, debit, and you have the credit sides, right? So we will take up the first transaction. It says they have put how much money in the business, how much is the sale proceeds, how much debtors, everything you have to take into account. We will first start off with the credit side. It says joint bank. We will first mention the sale proceeds here, right? So what is the entry? Joint bank account to joint venture account. Why? Because sale proceeds means you have sold the goods and money is coming in. So by joint bank account, this is sale proceeds, right? So nothing in the rough column, all in the fair column. How much is you getting from sale proceeds? 90,000. Okay, what else will come here? Debtors, because you have credit sales also of 30,000. So debtors will also come here, that is by sundry debtors. What is the entry? Sundry debtors account to joint venture account. They will pay, so their account will be debited by how much? 30,000. 30,000 account has been debited. Let's come on to the debit side. What they say, you have to have all the expenses that you have paid. So what is the entry? Joint venture account debit to joint bank account, because money is going out when you are paying the expenses, right? So which expense you are paying? You are paying for the purchase of goods. See, whenever you purchase goods, what entry you did? Goods account debit to cash, right? But here you are not debiting the goods account. You are debiting indirectly. You are debiting the goods account through joint venture account. So your entry is joint venture account to joint bank account. So joint bank account you mentioned separately. This is purchase of goods, right? How much is the goods? How much are the goods purchased for? 70,000. All right. Next is you have insurance. That is, you say carriage and insurance. Next expense is carriage and insurance. Carriage and insurance is how much? 18,000. Right. Next expense is selling expenses. That will also be through joint bank account. So selling expenses are 8,000. That makes up a total of 96,000. Right? What next you will make? Sundry debtors, they say there are sundry debtors which have turned bad amounting to rupees 2,000. Right? So what is the entry? If you are receiving, that is sundry debtors account debit to joint venture account when they are due. When you get the money, it becomes joint bank account to sundry debtors account. Right? So you are not receiving, but your account is being credited because that is becoming bad. Right? If you receive, bank account will be debited, but if you are not receiving, joint venture will be debited. So joint venture account debit to sundry debtors. You know what? This is bad debts. Right? So bad debts, how much is the bad debts for? 2,000. 2,000 are the bad debts. Next, what you have? You will have 90,000 plus 30,000, 1,20,000, 1,20,000, and you add 98,000. That will give you 22,000. So this is the profit, co-venturers profit transferred to their account. To co-venturers account means this is the profit actually, right? That is transferred to their account. What? Prakash and Kiran. Prakash and Kiran. Right? So this is how much? 1,20,000. 90,000 plus 30,000 is 1,20,000. 96 and 2 is 98,000. What is the balance remaining? 22,000. Right? 22,000. Now this is being shared. In which ratio in the question it is say being shared? It is being shared in the ratio that is 6:4. That is the amount they are getting in the business. That is 3:2. So 22,000. 3:2, 3 by 5. So you divide it in the ratio of 3:2. When nothing is giving, you are going to divide it in the ratio of their capital. So it is being 13,200, and the remaining is 8,800. So profit is being transferred to the co-venturers account. So this is joint venture. Joint venture account. Now here down we will prepare co-venturers account. Co-venturers account. The format is same, right? The format is all more the same. You will just have to have the certain additions and deletions, nothing more. Co-venturers account, you will mention all what they have brought in the business, anything they are getting from the business, anything they are giving to the business. So all that will be mentioned in the co-venturers account. So co-venture account, you just write it. Who are the two co-venturers? Prakash and Kiran. So this is Prakash's account, this is Kiran's account. This is Prakash's account, this is Kiran's account, right? So what is right? First is contribution in the business. What is the entry? Joint bank account to co-venturers account. So you write by joint bank account. See, when you get money in the business, what entry do you do? Cash to capital, right? So cash to Mr. A, B, C, A's capital, B's capital, like this. So joint account debit, bank account debit to co-venturers account, right? So joint bank account is being debited and co-venturer is credited. See, you are writing on the credit side of co-venturer, means co-venturers account is credited. How much money they are getting? Prakash is getting 60,000, right? And Kiran is getting 40,000. Alright, next is they are also getting what? The profit. So what your entry is? Joint venture account debit to co-venturers account. So which account is being credited? Joint venture account. So this is by joint venture account. See, whatever they are getting, Here also they are getting money, and here they are getting the share in the profit. So you write share in profit, right? How much is the share in profit? You just calculated the balancing figure, 13,200 and 8,800. So you write 13,200 and 8,800. So this thing is complete. Next is whatever you have, like you have 60,000 and plus 13,200, that will give you 73,200. 40,000 and 8,800, that will give you 48,800. This will be transferred. This will be the closing figure here. Every time remember, whatever is the balance, you write here to joint bank account final settlement. Always mention final settlement, right? So what is the balance? 73,200. Alright, this again is complete, 73,200, right? This is 48,800. 48,800. So you write here 48,800. Similarly, close it here also, 73,200 and 48,800, right? So this will be your joint venture account, and this is your co-venturers account, Prakash and Kiran's, right? So as you pass the entry here, you pass the entry here also simultaneously. Now we will prepare sundry debtors account and joint bank. Now we will prepare the sundry debtors account. We have already prepared 2 accounts. They have asked you to make 4 accounts. So let's make the sundry debtors account. We have joint bank account. First your entry was, you know what we did, 28,000 was remaining, and you had 2,000 for the bad debts, right? So you have a joint venture account for the bad debts. Total debtors was 30,000, from which 2,000 are bad. So 28,000 you have recovered. Recovered means money is coming in the bank. So what is the entry? Joint bank account debit to sundry debtors. So by joint bank account, how much you have? You just have to write 28,000. Please write amount recovered. I'm writing the short form of recovered, right? Next will be again by joint bank account, right? What you will write? Actually it will not be a joint bank account because money is being transferred to venture account. So it will be, money is not coming in. So it will be joint venture account, and this will be what? Bad debts. How much? 2,000. Okay, so you have do these 2 things. Last thing that will come here will be joint bank account. What? Final settlement. Co-ventures account. So it will be 2 joint venture account about the credit sales. I'm sorry. 2 joint venture account. See, when you prepared joint venture account, you made an entry, if you remember, sundry debtors to joint venture account. You had written it on this side, joint venture account, and you had written on this side by sundry creditors, credit sales. So you will write sundry debtors account to joint venture account, and this is what? This is credit sales of how much? 30,000, right? So this is closed by 30,000, this is closed. Out of this 30,000, 2,000 is bad debts, rest of the money has gone to the bank. So this creditors account is complete. Next account that they have asked to make is the bank account. Actually it is joint bank account. So it will be particulars amount. Bank account, what all will be there? You will have the joint venture account, that is you have paid all the expenses through the bank. So you will write that first, by joint venture account. See, in joint venture account you have made the entry joint venture account to joint bank account when you had paid all the expenses, right? So you will write there, here your goods You have purchased the goods, so that goods and expenses, the total how much you had got? 96,000. Whatever entry you make in one account, simultaneously you make in the other account, so you will not forget. What all? Final settlement we had made the entry in co-ventures account, right? What entry did we do? To co-ventures account debit to what? Bank account. So this will be by Prakash's account, right? And this is what? Final settlement. That is the balance that we have written on their debit side of the account. And how much was the Prakash settlement? 73,200. What was next? By Kiran's account. This is also final settlement. How much? 48,800. 48,800 is the Kiran's final settlement account. Next, what all you did? You had the contribution, that is money getting into the business. What was that entry? Joint bank account to Prakash's account. So it will be to Prakash's account, his contribution. How much did he get in the business? Initial contribution 60,000, right? To Kiran's account. This is also initial contribution. How much Kiran had brought in the business? 40,000. This is 40,000, right? What all was there? You had the sale proceeds, joint bank account to joint venture account. To joint venture account. How much? 90,000. So this will appear on this side. What entry did we do for the debtors amount that we recovered? So recovered amount had gone to the bank, joint bank account, debit to sundry debtors. So you will write here to sundry debtors. To sundry debtors, this is amount recovered. How much amount was recovered? 28,000. So 96,000 plus 73,200 plus 48,800, 2,18,000. 2,18,000. Then 60,000, 40,000, that will 1 lakh, 1,90,000, 1,90,000 and 28,000 is again 2,18,000. Okay. So this is joint bank account. Make all the parameters or make all the formats simultaneously. Write one thing here. Then what is the other entry on the other account? Just make sure you write it there also, so you don't forget. So you have made all the 4 accounts that were asked for. We will do the next question, that is what. We move on to the 4th numerical. They share in the ratio. There are 3 partners, Salil, Sarika and Satyajit, and they are sharing it in the ratio of 1:2:2. Any losses or profits, whatever the company is earnings, right? So Salil, Sarika and Satyajit, we see what they have contributed. So joint venture account in the books of SSS, that is Salil, Sarika and Satyajit. Next is joint bank account, that is the sale proceeds, right? By joint bank account, sale proceeds. Sale proceeds means the amount that they have sold, 10 lakh. Right? Next what they do is 10% debentures that has been given to the partners. 10% debentures has been given. So joint venture account they will get to, that is the, again this is the sales contract price that they are getting. Instead of money they are getting the debentures. So this is sales contract price. How much? Right, 15 lakhs. Next is Satyajit account. See, plant is taken over by Satyajit. If we would have sold it, we would have written joint bank account to joint venture. Instead, we have given it to Satyajit. So his account will be debited by Satyajit's account. Please write plant taken over. Don't forget to write in the bracket why you are debiting or crediting anybody's account, personal account, for 35,000, right? Next is joint bank account. You are selling the mixer, so nobody is taking it, is you're getting the money out of it. So joint bank account, because money is coming in when you are selling the mixer. How much you are selling it for? 22,000. Any other transaction on this side? No. We switch on to the other side. First is you have the joint bank account. We will see all the expenses that have been made to joint bank account, right? What is the first thing? That is the land that they have been purchased. Land. If you are writing in the fair column, you just write it in the rough column, all the items together plus it, and then write it here. How much? 3 lakh, right? Next is you have steel and other materials. Steel and other materials. How much it is for? 4,50,000. Right? This is all under joint bank account. Right? Next, what is you have? You have wages and plants. Wages, how much wages you have paid? You have paid the wages for 2,50,000. 2,50,000 is the wages. Next is plant, 1,50,000. Plant, 1,50,000. Right? So don't mention it separately. Mention under the one head, joint bank account. Right? Next is fees that is being paid by Salil. So if you would have paid by bank account would be credited because money is going down. So bank is not paying it. Who is paying it? Salil is paying it. Salil is paying 5,000. So please write here Salil's account. To Salil's account credited. Why? Because he has paid the fees. How much fees is paid by Salil? 5,000. Right? First add this up. 3 lakh plus 4,50,000 plus 2,50,000 plus 1,50,000. This will give you 11,50,000. Right? Then Salil's account is because he has paid the fees for 5,000. Next is mixture is being purchased by Sarika. So Sarika's account will be credited because money is going out of her account. So Sarika's account, mixer purchased, right? How much the mixture is purchased for? 50,000. So 50,000 is purchased. The mixture is purchased. Next is Satyajit's account because he is paying the freight and other charges. To Satyajit's account. Why? Because he is paying freight, etc. Right? If his account will be credited. Why? Because money is going out of his account, so his account is credited. Right? Here he is getting the money because he is getting the plant, so his account is debited. Satyajit's account is paying the freight charges. How much is being it's for 12,000. So 12,000 is being paid by him. Next is co-venturer's account. Whatever is the profit, no other entry to become. Co-venturer's account, that is profit transferred or loss transferred, whatever. So who are the three people? Salil, Sarika and Satyajit. Salil, Sarika, Satyajit. Right? Now see what is the profit. This is 10 lakhs plus 15,000 plus 35,000 plus 22,000. This will give you 25 lakh 57,000. 25 lakh 57,000. Right? Now we will see this side what it says. Make it 25 lakh 57,000. This side definitely it is less, we can see. 11 lakh 50,000 plus 5,000 is 11 lakh 55,000. This will be again 11 lakh 50,000 plus 50,000 will give you 12 lakh. 12 lakh for 5,000. Then you have 13 lakh 13,07,000. So how much you have? What is the balance? 25,57,000 minus 13 lakh. So the balance is 13,40,000. 13,40,000 is the balance. Now this balance is divided in the ratio of 1:2:2, right? 13,40,000 is divided in the ratio of 1:2:2. So 13,40,000 into 1 upon this total is how much? 5. So 13,40,000 into 1 by 5 will give you how much? 2,68,000. So that will be whose share? That will be Salil's share. Then 13,40,000 into 2 by 5. How much? It will be 5,36,000. So that will be whose share? Sarika's share. Then 13,40,000 into 2 by 5 will be how much? 5,36,000. Satyajit's. Right? Please see in which ratio they have to share. So this is the joint venture account. We have seen all the entries, that is paid by bank or any other partner is taken over, that is co-venturer is taking it over. Now next account that we have to make is the bank account and the debtors account. We will make the joint venture account. We will make the this is co-ventures account, Salil, Sarika and Satyajit, and the bank account. We will first write the initial contribution made by them. So this is co-venturers account. Initial contribution is how much? So entry is joint bank account to that is Salil's account, Sarika's account and Satyajit's account. So by joint bank account, initial contribution, how much they are contributing? Initial contribution. See, now what you write here, because simultaneously we will write here also. To Salil's account, to Sarika's account. See, co-venturer to by joint bank account, that is joint bank to co-venturer and bank to co-venturers. To So this you will not forget that way to mention any entry. This is 4 lakh, 5 lakh and 5 lakh. 4 lakhs, 5 lakhs and 5 lakhs. Similarly you will write it here. 4 lakhs, 5 lakhs and 5 lakhs. Right? This is the initial contribution. Now you will have what else co-venturers have done? They have paid the fees and expenses. Through which account? Joint venture account. By joint venture account, please mention fees and expenses. Who has paid what? 5,000 is being paid by Salil, right? 50 and 12,000 by Sarika and Satyajit respectively. 50,000 and 12,000. Right? Next is the profits that they have earned or received. By profit, from where they are getting the profit, that is basically you have to write here as joint venture account profit, you write here in the brackets, right? By joint venture account, how much profit they have received? 2,68,000, right? And 5,36,000 for the other two. He also will get 5,36,000, right? So this is joint venture and joint venture bank here also and here also simultaneously. Next is plant and machinery. Plant taken over by Satyajit, 35,000. So you write here please, to joint venture account, plant taken over. How much of plant is taken over? 35,000. Put a dash. Satyajit has taken over plant, so you write here plant. Next is 10% debentures have been taken over by Salil. 10% debentures taken over by Salil. How much? Worth 5 lakhs. This is 5 lakhs. Next is joint bank account final settlement. So this will go where? To joint bank account. To joint bank account. Please mention what? Final settlement, right? Final settlement means this plus this minus this. Equalize, right? So 4 lakh plus 5,000 plus 2,68,000 will give you 6,73,000, right? 6,73,000 minus 5 lakh will give you how much? 1,73,000. 1,73,000, right? Next 5 lakh plus 50,000 will give you 5,50,000 plus 5,36,000 will give you 10,86,000. 10,86,000 minus anything here? No. So what will you write? Full amount will come here. 10,86,000, right? Then 5 lakh plus 12,000 plus 5,36,000. This will give you 10,48,000. 10,48,000 minus 35,000 will give you 5,13,000. 5,13,000. So you write the figures. 673,000. Next 10,86,000. Next 10,48,000. So this account is closed, right? Next come to the bank account. You have written the initial contribution, then that is you write the contract price also. Joint venture account, to joint venture account, how much it was that for? 10 lakhs, right? What else will come? You have the sale of the mixer, you are getting the money. So again, to joint venture account, you are getting money through mixer. How much money you are getting through mixer? 22,000. 22,000, right? That's it. What will come in this side? This is joint venture account. You will write expenses by joint venture account. What all are there? Materials and expenses 11,50,000. Material and expenses 11,50,000. Right? Next what? Next is Satish. You have all, see what you have written, co-ventures account to joint bank account. So in bank account now you will mention this, right? By Salil's account, right? By Sarika's account, next by Satyajit's account. This is what? This is final settlement. By Satyajit's account, right? What all is there? This is final settlement of this and this, right? How much? 1,73,000. Then 10,86,000. Then 5,13,000. Right? What is the total? 24,22,000 for both the sides. Both the sides should tally. 24,22,000. Close the accounts. Right? So this was the fourth numerical of the chapter. Now we move on to the next numerical. We will switch on to question number 10. Let's see what question number 10 speaks. You have to write goods supplied. See, there are two partners or co-venturers, Nitin of Nagpur and Vinay of Wardha, and they are writing. They enter into a joint venture account, and in the books of Nitin we are preparing joint venture account, Vinay's account, and we are preparing again this account, right? Nitin and Vinay are supposed to be co-venturers. Nitin has sent goods and paid expenses. Vinay has done the same thing, sent goods and paid expenses. So whatever has been done by Nitin, we will write to goods supplied. We will not write his name, right? His name, right? To goods supplied, first of all, first line, that is goods supplied. So to goods supplied or goods account, right? We can write to goods account, this will come in the brackets. How much? 2 lakhs. That's given in the question, first statement. Right? Next is how much expenses he is paying? 2500 on freight and 1500 on sundry expenses. So 2 expenses, right? Or bank, because bank money is decreasing or money is going out of the bank, so bank account is credited. So bank, freight and expenses, freight and expenses, right? How much? 2500 and 1500. 2500 and 1500. Totals up to be how much? 4000. 4000, right? What is next? Next is goods supplied by Vinay, 1,20,000. See, last question I had solved, question number 7. That time I forgot to write the goods supplied by, didn't mention the goods sent by Nafisa. So I'm sorry for that, I apologize. You have to mention the goods sent by the other co-venturer also. So you please mention in the 7th question also, you have to write the goods sent by Nafisa that were amounting to 350 bags of 1,000 each. So you have to mention 3,50,000. I forgot to mention, that was missed out, but you have to mention that. So here also I am writing to Vinay's account, right? You will not write goods supplied, because goods supplied we are writing because this is in the books of Nitin. So you cannot write Nitin's account, but definitely you can write other co-ventures account, that is whose? Vinay's account. To Vinay's account, goods supplied. How much? It is 1,20,000. 1,20,000, right? Expenses are also paid. How much the expenses are paid? Expenses are paid for 4,000, I'm sorry. So again, who is paying the expenses? Vinay is paying the expenses. So again, Vinay's account is debited for what? For paying the expenses. How much expenses he is paying? 4,000. Right? What next they are saying? They say Nitin drew a bill of 40,000 advance and Vinay who accepts it. The bill was discounted at 5%, which is treated to be a joint venture account. See, 40,000 and you have 5% discount. So 40,000 into 5% is how? 40,000 into 5% is how much? 2,000. And that is considered as a joint venture through joint venture account expense. So you will write the expense of joint venture here, right? So discount will be coming here. Next is what? Nagesh remitted 2,50,000 by draft to Nitin and the balance to Vinay by accepting a bill. And what else he has done? Has he sold something? Yes, he has sold the goods for 4 lakh. So by who has sold the goods for 4 lakh? Nagesh's account. Nagesh's account. See, Nitin and Vinay are giving goods to Nagesh. So this is sale proceeds. How much? 4 lakhs. Right? Now you will mention the discount and other expenses. Next, what we will mention? We will mention the discount. So 50,000, right, into 40,000 into 5%. So you will mention the discount on what? On bills receivable. So that is treated as a joint venture expense. So you will write as to discount, that is treated as a joint venture expense. Next is commission and expenses, right? To Nagesh's account, commission is how much? 16,000, right? And on selling expenses, how much he is taking the expenses? 4,000, right? So total is how much? 20,000. 20,000 is the total expenses that he is charging. Now that is 4 lakh. You have to see, this is 2 lakh. This is 1,20,000, that is 3,20,000, 3,20,000 and 4,000, 3,60,000, 360 and 4 you will have 3,64,000, 3,68,000 and 3,78,000. Remaining how much you have? 50,000. See, you have 2,04,000, then you have 24 and 120. Add up all the 4 figures. This is 4,000 and 4, 8. 8 into 10. 10 and 20, 30, 30 and this is 50, 150 and this is 2 lakh. So 2 lakh plus 3,50,000, that is you will have 2 lakh plus 1,50,000, that will be 3,50,000. So total of this column is 3,50,000. What remaining is 550,000. So 4 lakh minus 3,50,000 is 50,000. So balance is how much? This is 4 lakh. Balance it here also 4 lakh, right? Then you have to divide it in the ratio. So it will be equal for 1,25,000 each. This is profit. Profit transferred to the co-venturers account, or profit on, this is you write profit on joint venture, right? Who are the two people who are getting? Nitin and Vinay. So we will write Nitin's name, no, because we are preparing his account. So write P&L account. How much? 1,25,000, and write Vinay's account. How much? 1,25,000. Right? 25,000. I'm sorry. This is 25,000. 50,000 in this ratio. So this is in the books of Nitin. Next we will prepare Vinay's account and then Nagesh's account. We are preparing Vinay's account in the books of Nitin. See, that there you did the entry joint venture account to goods supplied or to Vinay's account. So here you will write by joint venture, right? 1,20,000. There you wrote joint venture account to to Vinay's account, in the bracket you write expenses. So by joint venture account expenses, because we are preparing in Vinay's account. Then same with the bills receivable 40,000. Then the profit share, the entry was joint venture account debit to Vinay's account, that is profit on joint venture 25,000. So you will write by joint venture. Joint venture was debited there, so you will write here by joint venture. Come to this side, Nagesh's account. How much Nagesh did sold goods for? 4 lakh minus what were his expenses? 20,000. So this is 3,80,000. 3,80,000, from 3,80,000 he has given 2,50,000 to the other party, that is Nitin. So what is the remaining amount? 1,30,000. So Vinay is getting 1,30,000. Now you added, this is 1,20,000 plus 4,000 plus 40,000 and 25,000. Total is 1,89,000, right? Minus 1,30,000, that will give you 59,000. So this is to cash or bank, that is amount received in full settlement. Cash or bank, whatever, right? Amount received in full settlement. How much? 59,000. And you write 1,89,000. Alright. Next you come to Nagesh's account. Next we are preparing in the book of Nagesh. So Nagesh, first we will mention the sale proceeds that he has made. So what entry did we do? Nagesh's account debit to joint venture account. So right here, to joint venture account, and what you will write? Sale proceeds. How much? 4 lakhs. Then what entry did we do for paying the expenses? Joint venture account debit to Nagesh's account. So by joint venture account. For commission and expenses, by joint venture account, right? Commission and expenses. How much they were for? 20,000. Alright, what was the next thing? We had amount that was received for 2,50,000, right? They had paid amount. Remember what amount was given? So 2,50,000 you will mention in Nagesh's book. What? By bank account. Amount received. Right? What is the next thing? That was the bill that was made. Who made the bill? Bill was made by Vinay. Vinay accepted the bill, right? Vinay accepted the bill for we wrote in Vinay's account 1,30,000 for the bill was. So we wrote in Vinay's account, Vinay account debit to Nagesh's account. So by Vinay's account for balance that we gave him. How much that was for? 1,30,000. So 2,50,000 was given to whom? To Vinay, right? Nitin. I'm sorry. This was given to Nitin and this was given to Vinay. Right? So these are the two amounts that were given to Nitin and Vinay. Nitin's name is not mentioned because we are preparing in Nitin's book only. Vinay's name we have mentioned for 1,30,000. So 2,50,000 plus 1,30,000 will give you 3,80,000. 380 and that will plus 20 will give you 4. So the accounts are balanced with 4 lakhs. Next we will move on to the 13th numerical, please. Let's move on to the next question. We are doing the 13th numerical. Latika and Swapna entered into a joint venture and you have to prepare the accounts between the co-ventures were settled at the end. Joint venture account, joint bank account, Latika's account and Swapna's account. So it will be that way. So co-ventures account, both the co-ventures account you have to prepare, joint bank account you have to prepare, and you have to prepare the account of, that is you preparing joint venture account. See, now you see in the 13th question, in the books of Latika and Swapna, you are preparing the joint venture account. It is not in the books of a particular partners, right? So we are just preparing the joint venture account. So we will mention all the names that are there. First is purchase land for 5,90,000. First is they have contributed, that is the initial contribution that they have made, 3,50,000, 4,50,000. So that will not come in joint venture account, that will go to co-ventures account. And they share in this only. So their sharing ratio is 35:45. You can make it to 5 also. So that will be right. Next is following are the transactions of the venture purchase land for 5,99,000. So joint land is coming in and bank account is being debited. So credited. So to joint bank account, right? Why? For purchase of land. How much that is for? 5,99,000. 5,99,000, right? Next is you are paying the expenses, land development expenses. So you are paying from bank only. Development expenses you are paying for 9,950, right? What next you are paying? You are paying demarcation charges of 11,050. Demarcation charges of 11,050. Then you are paying advertisement expenses 25,000. Advertisement expenses 25,000. Then you are paying legal charges 15,000. You are paying legal charges 15,000. So 5,99,000, 9,950, 11,050 plus 25,000 plus 15,000 will give you 6,60,000. 6,60,000. Right? What next? 5/6 of the land was sold for 8,50,000. So land sold, money is coming in. So by joint bank account, how much money is coming in? 8,50,000. 5/6 of the land sold. How much? 8,50,000. What next? Remaining land was taken over by Swapna. So next is Swapna's account. No money, it's going to Swapna's. Swapna's account. Remaining means 1/6, right? 1/6 land taken over. How much? For 1,40,000, right? 1,40,000. What next they say in the question? Latika paid 10,000 for registration fees from a private source. So Latika's account will be to Latika's account. How much Latika is paying the registration fees? 10,000. Latika is paying 10,000. Next is you have to, there's no other entry, so you will find out profit or loss. So 8,50,000 plus 1,40,000 will give you 9,90,000, right? And calculate this side, 660 plus 10. You will have the remaining, that is 670 minus 9,99,000, 90,000, that will give you 3,20,000. You have to divide in the ratio of 7:9. So you will calculate the profits, 8,50,000 and 1,40,000, that will give you 9,90,000, minus 660 and minus 10,000, that will give you 3,20,000. So what that will be? That will be profit. Co-ventures account. Co-ventures account, profit transferred. Who are the co-venturers? Latika and Swapna. How much? 3,20,000. This will be 9,90,000 and 9,90,000. Divided in the ratio of 7:9. You will get 1,40,000 and 1,80,000. Alright. So 1,40,000 and 1,80,000. Now we will prepare co-ventures account and bank account. We will prepare the joint ventures account. See, joint ventures account, first you will write what money they have brought in the business. So it will be joint bank account, because bank account is increasing, so it will be debited. And who is giving the money? Co-ventures, so their account will be credited. So this is by joint bank account, because bank account is debited because money is, I'm writing country, coming in. How much they are getting the money? 3,50,000 and 4,50,000. This is Latika and this is Swapna. This is Latika and this is Swapna. So 3,50,000 and 4,50,000. Alright. What is next? Next is registration fees paid by Latika. So what was the entry did we do? Joint venture account to Latika's account. So by joint venture account. By joint venture account. How much Latika is paying? Latika has paid 10,000 as what? As the registration fees. Right? Next is joint venture account. You had the profit. What was the entry? Joint venture account to co-ventures account. So here it will be by joint ventures account. So that will be share in the profit. Share in profits. How much? 1,40,000 and 1,80,000. 1,40,000 and 1,80,000. Next you come on this side. You have the land that has been taken over. What was the entry? Swapna's account debit to joint ventures. Right? To joint ventures. How much land did Swapna took over? Swapna took over land worth 1,40,000. 1,40,000. Right? Next what was this? You had the settlement accounts. You remember 5 lakh and 4,90,000. See in the question that's been given to you. Land has been taken. Registration fees, remaining land was taken. Then you have the rest of all the entries are finished. Now you do 3,50,000 plus 10,000, 3,60,000, and 1 lakh will be how much? 5 lakhs. So to bank account, right? To bank account for final settlement. How much? 3,50,000 and 10 and 1,40,000 will give you how much? 5 lakhs. Right? Next 4,50,000 and 1,80,000 is 6,30,000 minus 140 will give you 4,90,000. 4,90,000. Equalize. Close the accounts. How much this was for? 5 lakhs and 6,30,000. 5 lakhs and 6,30,000 for Swapna. 5 lakh for Latika and 6,30,000 for Swapna, right? So this is co-ventures account. Next account that we will prepare is the bank account, joint bank account. We will prepare the joint bank account of the same question. See, what was the entry we did when we took over the, we paid the legal charges or all the charges, joint venture account to joint bank account. So, joint venture account to joint bank account. So, by joint venture account. How much the expenses total were? 6,60,000. Okay. So, you just write their expenses maybe. Land and expenses, because we took over, it is land and expenses, right? Purchase of land also. Then what did we do? Joint venture account to Latika's registration fee, that is done. We did joint bank account to joint venture account, 8,50,000. Remember, sale proceeds, that is 5/6 of the land sold. So entry was joint bank account to joint venture account. So to joint, as you say and you write it, to joint venture account. What was that? Sale proceeds. Sale proceeds of land. How much? 8,50,000. Right? What next? Come to co-ventures account. What entry did we do? Joint bank account to Latika's account to Swapna's account, 3 lakh and 4,50,000 respectively. So right there, to Latika's account to Swapna's account, that is contribution. The initial contribution Swapna is making, Latika is making. How much? 3,50,000. And how much Swapna is making? 4,50,000. What else? Anything else? Right. The settlements account, co-ventures account to joint bank account. So by Latika's account, that is final settlement, and by Swapna's account, final settlement. How much? Final settlement 5 lakh for Latika and 4,90,000 for Swapna. So 5 lakh for Latika and 4,90,000 for Swapna. So just add it up. 8,50,000 plus 3,50,000 will give you 12 lakh, and that will give you 16,50,000 plus 4. That will be 16,50,000. Next is 6,60,000 plus 5 lakh. That will give you 11,60,000, and 490 again will give you 16,50,000. 16,50,000. Right? So this was a joint bank account. Simultaneously, if you do it, you know, all the you make 3 accounts in your registrar, whichever paper you do, you write joint venture account to bank, all the things. Then in bank account you write by joint venture. So simultaneously you're doing it 2 sides, you will not forget any of the entries. So we have in the books of Latika and Swapna together, we have made joint venture account, co-ventures account and joint bank account. That brings end to the chapter. We have probably solved the numericals that were different in nature. The similar problems we have left out. Just refer to the problems that we have solved, so you will find some of the other things similar and you can solve the rest of the problems on your own.